in which a lot of investors had invested, thinking that this fund will make good rates. But unfortunately, this fund has gone down in the last 2 months. So if a fund goes down so much in such a short time, then there is a lot of doubt that after all, we have not picked any wrong fund. If you look at the Motilal Oswal MADC fund, then this fund is in the limelight in the recent past. I have no reason to believe that the fund had made bad returns. The fund's returns for the last 3 to 4 years were so impressive that the fund became the number one midnight fund in the last 10 years. Friends, you can guess the craze of this fund from the fact that the AUM of this fund was only crores of rupees in February, which has increased 3 times in just 1 year. So today in this video we are going to review this fund in detail and we will try to know whether this fund is still a good choice for investment or not. And should we exit this fund? So friends, to know the answer to all these questions, stay tuned to the end of this video. First of all, if we talk about the basics of the fund, then it was launched in the fund, which means that the fund is not new and its long track record is available. The diet plan of the fund is of the same, but that is, this fund will also be cheaper than you. If you look at the latest age of the fund, it is crores of rupees, which means that a lot of investors are still invested in this fund. If we talk about fund managers, it is managed by Mr. Nikesh Sar, Mr. Rakesh Sethi, and Mr. A.J. Kandelwal. So there have been no changes in fund managers here either. At the same time, these three fund managers have a lot of interest in the growth style of investing. So there is no problem among the fund managers here. So let's compare the returns of the fund with the returns of its benchmark and category average. The fund's returns in the last year are percentage of benchmark, where the fund's creep has been the first among the funds. In the last 5 years, the fund's rates are percentage, while the benchmark is percent. Here the fund's rank has been the second among the funds. The rates of the fund in the last 3 are the percentage, while the benchmark is the percentage. Here too, the rank of the fund has been the first, after the rates of the last 1 year. The rates of the fund here are percent, while the benchmark is 90%. Here also the rank of the fund has been the first among the funds. So here is the RAI, where it has been beating itself and cave very well. Also, despite such a decline, the fund is still the number one fund. While talking about recent performance, here too, this fund has fallen the least among the funds in the last 6 months. If we look at the world, it is also the highest in terms of falling out of it, in which this has shown gyrout. That's where and more have fallen. This means that it is not that this fund is falling alone in the gyrout, but all the funds are showing gyrouts along with it. Even you will find funds that fall more than this. Friends, you can see in this chart in which in the last 6, I have compared the Motilal Oswal Mid-Cash Fund against its peers, where this fund is in line with the rest of the funds. If you look at the comparison of last 1 year, then there is no other fund around this fund where this fund is giving very good positive returns. Now let's look at the risks of this fund. If you look at the alpha of the fund, it is there. The category is average. The alpha ratio tells us how much more the fund is rating than its benchmark index. So here the alpha of the fund is much higher than the category where it ranks first. Talking about the beta, it is of the fund. There is also the category average. The beta ratio tells us how volatile the fund is. So here it is volatile coding the fund category average, where it has been ranked. Talking about the snake ratio, it is of the fund, while the category is average. The SAP ratio indicates how risk-free rates the fund is making. So here too it is the best of the fund, where it is first in its category. Overall, even after such a decline, the fund's risk ratios remain quite good. Let's see the portfolio of funds. If you follow the number of stocks, then only stocks are present in it, while the top. This means that the portfolio of this fund is very highly concentrated. If you look at the PB ratio of the fund, it is the same as its P ratio. So what is its is close to it. But this fund is much more than that. That is, it does what it does, due to which you will get more from it. If we talk about the present case holding of the fund, then it means that this fund has held a large portion in the case at the present time, which can also be considered a good strategy in market gyrouts. Because if the fund has a case lying around, then it can gravitate good opportunities. If you look at the turnover of the fund, then it is percentage. It tells us how much I do in a year. If it is low, then it can be considered good for it. However, there is a lot of this fund, which is that this fund does it repeatedly in stocks, where if a fund runs out, it immediately depletes that stock, due to which it is too high. If you look at the asset allocation of the fund, it has not invested any money in mid-cap companies, in large cabs, and in small cap companies. So friends, the fund is also good, where no one is made in it, while it is almost in it. So in this way, the break of this fund is reduced. If you look at sector-wise allocation, FundNet has the highest exposure in technology, capital goods, services, consumer and automobile. However, if the exposure to this pandy technology is lower, which increases the concentration risk of a specific sector, then this strategy can be risky, although it can also be rewarding on the other hand. Friends, anyone's envy falls only when its good is not doing. You can see this here, in which the key is more than the less, which is very risky, in which even a big gyrout in one of the stocks goes down. You can pick up any of its stocks and check it. You will see a correction from the almost high to the almost high. And the stocks of this fund have also seen more than the market's expectations. Because the fund invests in growth stocks, which trade at premium valuation most of the time, which also rise and gyrout is the fastest. Also, if you look at the stocks of the top holdings of this fund, you will find Persistent, Coforge, Kalyan Jewellers, Trent, Dixon. Stocks such as Polycab and Paytm will be visible, which have fallen sharply from their all-time highs, due to which the fund is currently underperforming. In my personal opinion, as much as this fund was supposed to fall, this fund has fallen, which is unlikely to fall much now, because most of its portfolio stocks have lost their valuation. However, it may remain stable or see a lot of decline. But and all these equity market friends, nothing can be predicted here. As for selling this fund, it's yours. If you are not that much, you can of course do so. But if you are still stuck with it, so you have tolerated a great gyrout, but you are a little wiser. At the same time, I don't live like a lot, friends, because there are so many people living here, so there is less here. On the other hand, if you were directly invested in stocks from Client Jewelers or Polycape, you would have been averaging in this gyrout, but you can average in mutual funds. However, on the other hand, Motilal Oswal Medisave Fund is a high volatile nature fund, which generates returns in a very aggressive manner. So if you can't afford this kind of volatility, you should look for a mid-cap fund that follows a stable strategy. So friends, I have told you in this video. You can check out this video. You will find the link in the I button. So friends, this was today's information. I hope you liked it. If you like the video, then please like, comment and share it. Also subscribe to this channel. So let's meet friends again.